market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump has suggested that the U.S. may be extracting Venezuela's oil for years, telling the New York Times that only time will tell. The Trump administration says it plans to control future sales of Venezuelan crude and hold the proceeds in U.S. accounts. The U.S. Energy Secretary has denied that the country's oil is being stolen, saying it was important for Washington to have control.
We're going to let the oil flow, sell that market to United States refineries and to around the world to bring better oil supplies, but have those sales done by the U.S. government and deposited into accounts controlled by the U.S. government. And then from there, those funds can flow back into Venezuela to benefit the Venezuelan people. But we need to have that leverage and that control of those oil sales to drive the changes that simply must happen in Venezuela.
Well, defense stocks amongst the biggest gainers on the stock 600 after President Trump demanded a more than 50% increase in the U.S. military budget. Defense stocks in the U.S. sliding after the U.S. president threatened to cut off those companies that don't invest enough. Now, Donald Trump also signaled out RTX's defense unit Raytheon, saying that unless it invests more upfront, it would no longer do business with the Department of War. Now, joining us now is Marina Zavolock, Chief European Equity Strategist at Morgan Stanley, and Alessia Berardi, Head of Emerging Market Macro Strategy at the Amundi Investment Institute. So thank you both for joining us. Alessia, there's a lot going on in emerging markets. This was one of the most brazen geopolitical moves actually in recent history. How does it play across how central banks are thinking of this and how politicians are thinking about this across the world?
Yeah, sure. The first thing to look at is the reaction of the oil price. And so far has been quite muted because on one side you are fearing, disruption, increasing the prices, but on the other side you know that with increasing production in Venezuela that will curb the oil prices. And that is important for inflation and to distinguish even between importers and exporters between emerging markets. As of now, the inflation dynamics are very well controlled in emerging markets. Oil price reaction is muted. Central banks can continue to do their job and finishing the easing cycle.
Does it change any risk appetite, Marina, out there? I know we're looking at defense stocks, but it feels like the world is different. We talk about the Monroe Doctrine. You don't know where this ends.
Yeah, I mean, as far as outside of defense, something like geopolitical risk premiums going up in the market, we're not really seeing that so far. That read across is not being made. I think things would have to escalate quite a bit for that to happen. But yeah, we do really like the defense sector, and we've been calling for a strong seasonal rally right at this point.
I mean, are the stronger defense companies in Europe almost stronger than the U.S.?
I would say they have...
On valuation terms.
Yeah. On valuation terms, they're probably they're at a premium to the U.S., but the European growth is much higher than in the U.S. With the rearmament trade. And I would say the catalysts are, there's multiple catalysts. It's not just that the U.S. is raising defense spending, but it's also the pace at which Europe needs to rearm. There's also Greenland that's now in the headlines. So there's multiple drivers for the defense trade.
Alessia, what do you think markets overall will be looking at in the next couple of weeks? I know there's a bit of a risk on when there's something good with AI, and then, there are worries about just multiple crises at the same time. So if it's not a geopolitics thing that really plays out in the markets, that it just feels much more uncertain out there.
Yeah, you're right. I mean, there are several factors to look at. Of course, as we have seen in the reaction of the gold, the perception of risk has increased because now the rule of the games are changing, and we have more military involvement around the world, and that can create some, more hot spots across the world. So think about Taiwan, think about Europe, think about several geographies, Iran, again, with the impact on oil. So, yeah, the risk perception has increased. What is important to pay attention to is the dollar. We have been always thinking that the dollar acts as a safe, asset, and that can be detrimental for emerging markets. But in reality, the dollar, since a while, is not really acting as a safe asset. So as long as the dollar remains relatively weak, that is a good, is conducive for emerging markets investments.
What do you think happens to the price of oil? I mean, I know it's extremely difficult to call, but a couple of days ago, a lot of oil experts were saying, look, it's actually just quite difficult to get the oil barrels out of Venezuela because of the infrastructure. And now there seems to be much more of a resolve from the Trump administration to get at least the 50 million.
Yeah, between Venezuela and the U.S., not between Venezuela and the rest of the world, as we are saying. So this is good in the sense for Venezuela exporting oil and, trying to smooth down the high level of inventory and storage oil that they have, but is a one way, is only to the U.S. I mean, President Trump is not allowing the U.S. The oil to flow from Venezuela to other countries, and that can be, a problem for countries like China, or other countries that actually are benefiting from, a discounted oil coming from Venezuela or the sanctioned countries.
We talk, of course, about Greenland, Marina, and if there is this America First kind of doctrine, what does it mean for valuations in Europe? Where does the European economy go from here?
For Europe overall?
Europe overall, yeah.
I mean, depending on the geopolitical scenarios, as I mentioned, for now, what we see in Europe at the current kind of rate of geopolitical risk that we're seeing is that it means more spending in Europe. So as you see defense rearmament being taken more seriously across European capitals, especially in Germany, but broadly as well, spending goes up, investment goes up. You see companies re-leveraging. So far, this is just a positive for the market, and it's especially benefiting the defense sector, but also more broadly, we're seeing a re-rating in Europe.
I know you're below consensus on European earnings growth.
Yes.
And that's because of the link to China.
Yes, yeah. It's because of China competition. So if you look at net exports of Europe versus China, China looks like this. Europe is kind of starting to roll over a little bit. And year after year, what we see in Europe is earnings downgrades. This year, we're starting especially high, 12% consensus. We're just below 4% on our base case. And the 60 to 90% of the move down in consensus year after year in recent years has been China competition or China old economy exposure related for Europe. So we think this is still going to be a challenge.
Alessia, what's your take on China overall? I mean, it feels like this is also a direct confrontation, maybe from a geopolitics, foreign affairs point of view, to China. And China has huge deflationary problems. Yeah, no, indeed. I mean, the latest string of data out of China are just confirming the picture of a very divided economy. Exports are driving the economy up, but domestic demand is weak, and that reflects in very weak exports, as we were talking about for the European earnings. So this is there, and this is reflecting even a very low inflationary environment. What we are talking about with the fact related to Venezuela is a more medium-term picture that we have to look at, because indeed China is an important oil importer, and the U.S. is trying to get a more grip or more relevant position in the energy markets, and that again is a confrontation between China and the U.S. So U.S. want to increase the control of natural resources. How do you see if you look at consumer spending in Europe, and how does that also look at your advice in terms of where to invest sector-wise in Europe for the next couple of quarters?
Yeah, I would say Europe almost has more exposure to the U.S. consumer than it does to the European consumer. And I should caveat that Europe is the most globally diversified region of any major region in the world. So we're underweight the discretionary retail sector in Europe, but it's a very small sector. So it's not going to move the needle that much on the overall index. And then meanwhile, you have about a quarter of revenues in Europe coming from the U.S., where things are still relatively strong.
Is that overall? I mean, we had some concerns about Tesco this morning. Is this more UK related, or could you see this kind of change in consumer behavior affect other European countries?
We see this weakness in particularly discretionary spend being broader than just the UK, in Europe as well.
What do you do with AI? I mean, I don't know where I look, actually. For big tech companies in Europe, there's ASML and a couple.
Yeah.
But is this the year where we have a washout in terms of valuations or a correction? And what does that mean for European tech?
We like AI. Europe, as you say, it only has pockets of AI enabler exposure. So you have the semis, you have pockets of the cap goods sector that have done really well. We think will continue to do very well. I think the big debate in Europe is when do we reach the point that AI adoption ROI is here. I can see it. We've quantified it. I think it's here. But so far, like if I give you an example of the bank sector, which is one of the biggest beneficiaries of AI adoption ROI on our analysis, so far this is driver, let's say 7 of the number of positive drivers, and it needs to move up to the top 3 in order for the market to take it more seriously. But we think that could happen in the second half.
Okay. Alessia, overall, I mean, we're trying to figure out again what this Dunroe doctrine actually is. Is it only, put on the Americas and South America? I know there's been a lot of anxiousness in Cuba, Colombia and others. Or do you see this widening to other parts of the world?
No, I mean, this is an important, fact, what happened in Venezuela, because clearly it makes the region less stable and probably more vulnerable. We have to think that we have important elections this year in Latin America, Brazil, Colombia, and President Trump has been already warning clearly some countries in Latin America. But it's not only related to Latin America. As I said before, there are other regions, and with this kind of change of rules, potentially a more assertive China can become a more an issue for Taiwan, for example, and we saw even the warning towards Greenland, as you were mentioning before. So it's not just a matter of Latin America. But of course, Latin America is according to President Trump, is a kind of backyard for the U.S. For the U.S.
So does the action in Venezuela actually impact some of these elections?
Well, normally when President Trump has been quite vocal against the current, administration, has created a kind of counterintuitive impact, like in Brazil, for example. So the rating approval for Lula after the 50% of sanction has increased. In reality, the region is going through a quite profound process because the sense of security there is very weak. And therefore, the results that we are seeing in Latin America, we saw in Chile 1 month ago. We are going to see Colombia elections soon. I mean, the people are reacting to this sense of security. So it can impact, but I don't think it can change completely the picture.
So interesting. Thank you both for joining us. Marina Zavolock, Chief European Equity Strategist at Morgan Stanley, and Alessia Berardi, Head of Emerging Macro Strategy at the Amundi Investment Institute. Now, coming up, how U.S. political revolution will affect generations to come. We'll hear from the Eurasia Group President, Ian Bremmer, about what he sees as the top risks for this year. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, political revolution in the U.S., Europe under siege, and a hybrid war between Russia and NATO. These are amongst Eurasia's group top risks for 2026. Now, it describes this year as a tipping point year. I've been speaking to Ian Bremmer, the Eurasia president, about why.
No question, because the United States is undoing its own global order. And is in the midst of what we call a political revolution. The U.S. is by far the most powerful country in the world. That is not changing. But its reliability in terms of what it stands for, its political priorities, again, at home and around the world, is changing dramatically. And that is putting a lot of other countries, both adversaries and friends of the United States, on notice.
What have we learned in 2025 about what the U.S. administration wants to do, and what does that mean for the new global order?
Well, it's changing. In 2025, at the beginning of the year, and you and I have spoken through it, we were talking a lot about tariffs. We're talking a lot about the United States weaponizing market access in the U.S. To get more of what it wants from other countries around the world. That was a really big deal on Liberation Day. It is much less so in 2026 for lots of reasons. You've got the Supreme Court ruling on IEEPA coming down shortly, which is likely to constrain the president's ability to tariff. You have affordability issues that are really problematic for Trump at home with midterm elections coming up. And you have the Chinese showing that they are willing and capable to hit Trump in the face, giving back as much as they've gotten, that Trump has to back down on. But as Trump moves away from using the tariff as the principal tool of American economic power globally, he is moving towards military force, where the U.S. is more unilaterally powerful. He is embracing the so-called Donroe Doctrine, which I'm sure you want to talk about. And that is an area that it's a lot harder for countries to force Trump to taco. It's much more, as they say recently, FAFO, fool around and find out.
See, what does Venezuela teach us about what Vladimir Putin should be thinking? What does it mean for China, and what does it mean for Greenland?
It means a lot more for allies than it means for adversaries. For adversaries, the Russians did not need the United States to invade Venezuela to make them understand that they don't like the existing international order and they want it to be more of the law of the jungle. Russia's problem is they can't execute on that. If Russia had the military capacity to pull off anything close to what the United States did over the last weekend in Venezuela, you and I would be having a very different conversation about the state of Europe right now. Right? That it'd be a radical problem for the frontline Europeans, and more than that. But they couldn't do it, and that's the issue. The fact is that they may be stronger than the Ukrainians in taking territory there, but they're weaker than lots of other folks. And globally, the Russians are losing influence. At the end of the day, it's not like Trump was asking the Russians if they were going to do anything in response to the Americans hitting their ally, Venezuela. China, too. You know, there was a China delegation in Caracas that had just met with Maduro the day before, a high-level delegation. Trump didn't give them any notice that the bombs were coming in, and the Chinese public response was that they were shocked. Well, of course they were shocked, because the Americans don't care about how the Chinese feel about what happens in America's backyard. Now, the Chinese, of course, feel the same way about their backyard. Again, it's a question of how capable they are to impose those outcomes. What's stopping them from taking Taiwan, which they consider to be a matter of domestic policy, has been how well defended Taiwan is, and whether or not Taiwan will continue to be well defended if America does or doesn't care about it.
But if you're Vladimir Putin now, would you not feel threatened after what happened to Nicolas Maduro?
You know, Putin has played with Trump toe-to-toe for a year now, and he has given Trump absolutely no quarter on a ceasefire. And he has seen that the response from the United States is that they're going to press Ukraine a lot harder than Russia. Why? Because Ukraine is a lot weaker. They're much more likely to capitulate. And Trump doesn't care about the conditions of a ceasefire. He just wants it to happen, and he wants credit for it. So if you're Putin, I think you feel like this is a time of maximum vulnerability for the transatlantic alliance, maximum vulnerability for the frontline European states. And what you learned from Venezuela, yes, you lost access to an erstwhile ally that you couldn't support in the Western Hemisphere, just as you did when Bashar Assad was toppled, just as you did when the Americans engaged and supported Israel in a 12-day war in Iran. But the much bigger statement is what the Americans are right now saying about Greenland. That feels very strategically attractive for the Russians. They've never heard such good news from U.S. on the foreign policy side since Putin has become president.
But what happens with Greenland? Again, this would be the end of NATO if something militarily were to happen. And is this really part of the Donroe Doctrine, or is this just trying to negotiate like a real estater and see what happens?
It is part of the Donroe Doctrine. If it was just a matter of security, basing agreements, listening posts for intelligence, heck, give Elon Musk a station to launch Starlink, all of that is negotiable with one of America's friendliest allies historically, Denmark. Remember, they were the country that, immediately stepped up at 9/11, sent troops to Afghanistan, had a lot more casualties per capita than the Americans did there. But that doesn't matter. The Americans aren't trying to negotiate with Denmark. The Americans are saying they want sovereignty over Greenland, and they will work directly with Greenland, both overtly and covertly, and they'll use both carrot and stick. Look, if there were a military invasion, yes, it would be the end of NATO. Just like if the Russians were to send tanks into Poland, it would actually lead to a war between NATO and Russia. But of course, that's not what we're talking about. What we're talking about is the United States deploying a whole bunch of tools, overt and covert, that are much less than sending troops into Greenland, and therefore makes it much harder for the Europeans to effectively respond. In a sense, it's the United States borrowing from the Russian playbook.
But, so what is the right way for Europe to respond? Is it drawing a red line? Does NATO actually actively intervene? How should Denmark react?
Well, they're finally starting to. In the last 48 hours, you have seen statements from the Danish prime minister collectively supported by all of the Nordic leaders and many of the Europeans as well, that makes it clear that NATO will be over if there is an effort to directly take Greenland, not defined very clearly, but that's a start. They weren't saying that publicly a week ago. Look, what the issue is that right now there is a spectrum. There's a spectrum between weak countries where the Trump operational doctrine is FAFO, F around and find out, and powerful countries where the Trump operational doctrine is TACO, Trump always chickens out. Xi Jinping and China are in the TACO camp. Venezuela and Maduro are, they found out, in the FAFO camp. And right now, the Americans consider the Europeans to be solidly FAFO. So they need to be credible. They need to be able to show Trump that there will be consequences that matter for Trump personally and matter for the United States if the Americans are going to throw away the alliance and undermine the territorial integrity of a sovereign allied nation. That's what they need to do. Are the Europeans capable of doing that? Are they strong enough to do that? Looking at the governments right now in the biggest European countries, including outside the EU, the government of Germany, the government of France, the government of the UK, these are weak, vulnerable governments, and they're going to have a really hard time responding to what Trump is serving up.
Ian Bremmer, their president and founder of the Eurasia Group. Now, protests have erupted in Minneapolis after an immigration and customs enforcement officer shot and killed a woman in a car during a confrontation. The Trump administration has cast it as an act of self-defense, but the mayor of Minneapolis has described it as a garbage narrative.
ICE agents repeatedly ordered her to get out of the car and to stop obstructing law enforcement, but she refused to obey their commands. She then proceeded to weaponize her vehicle, and she attempted to run a law enforcement officer over. This appears as an attempt to kill or to cause bodily harm to agents.
What they are doing is not to provide safety in America. What they are doing is causing chaos and distrust. They're ripping families apart. They're sowing chaos on our streets, and in this case, quite literally killing people.
Of course, we'll have plenty more on that throughout the day. Coming up, shares in Britain's largest supermarket chain slide after disappointing Christmas sales. We'll discuss the state of the UK's retail sector next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump says the U.S. could be in control of Venezuela's oil for years to come, but the U.S. Energy Secretary denies that the country's oil is being stolen. The U.S. president demands a $500 billion increase in U.S. defense spending, but threatens to end business with those companies that don't invest enough. Plus, Tesco sales over the crucial Christmas shopping period disappoint as sticky inflation hits consumers. So let's stick with that story and the retail theme. We're now joined by Jennifer Creary, Bloomberg's global business reporter, and Bloomberg opinion columnist Andrea Felstead. So we'll talk a bit about luxury, about retail in general. But let's start with food, Jennifer. I mean, Tesco didn't really go to plan.
Yes, it's been a bit of a disappointing Christmas for Tesco. So analysts were expecting a profit guidance upgrade. That didn't quite happen. Tesco did say that it's guiding towards the upper end of its profit guidance range. But still, investors perhaps a bit disappointed that they didn't do that actual upgrade. Also, like-for-like sales in the UK missed analyst estimates. So perhaps, not a strong Christmas for Tesco, probably because of its, value proposition. It's had to really keep prices low to kind of keep customers coming in.
So what do we know about how people spent actually during the Christmas period, especially when it comes for food? Are they trading up or trading down?
So it's a bit of both, really. I mean, so Ken Murphy, CEO Ken Murphy told us on the call today, there are some households that are looking to really trade up to its finest range, but also majority of customers still seeking value. So Tesco, of course, has its price matching initiative with Aldi, the discount retailer. So really, Tesco is kind of being squeezed to keep prices low, to keep customers coming in.
Yeah, and it feels a bit like the high-low, maybe that you match. You buy, I don't know, a Christmas pudding somewhere very nice, but you trade down on something else, Andra. Is there a pattern also that you see for non-food grocers?
Exactly that. And what we've also seen helping the finest is people trading out of restaurants and eating at home. So when you eat at home, you maybe indulge a bit more. But there is definitely a high-low going on where you maybe buy a bit of luxury, a bit of Zara. Primark seems to have, missed out on that a bit, not doing so well. I feel that they've really lost a bit of their sparkle since they, parted company with their CEO, Paul Marchant, last year.
And is that because there are newer brands that are doing better in that same space, or again, people are kind of like shopping around for individual items more?
I think Primark was a great place to go for something that was cheap but also stylish, and I feel they have lost a bit of that Primani magic at the time when you've got other people, as we know, Shein, but also the supermarkets doing a great job on clothing. Both Tesco, Florence and Fred, Sainsbury's too, they're doing a great job on clothing, which is affecting Primark, and I bet it's affecting M&S. M&S clothing sales were really disappointing, and I bet there's a bit of competition going on there.
How did M&S do in general?
Yeah, so it was a miss on food and clothing. The retailer did say it's got its highest ever share of the UK grocery market, but still you have to remember, M&S had that really damaging cyber attack in the middle of last year, where it had to take sales offline for about 4 months. So it's really still recovering. But analysts were saying that, this was no worse than feared. And it looks like M&S is on the right track to recover from that cyber attack, even though it's taking a bit of time.
Is there anything else that in the supermarket space that we're watching out for, like Sainsbury's or anything like that, to give us an indication of if there's something more symptomatic out there?
Yeah, so we've got Sainsbury's results out later this week. Of course, we've got big day today for Tesco, M&S, and also that unscheduled profit warning from ABF. I mean, overall, the picture that it's telling us is that, consumers are still very wary. They're still really keeping a tight hold on their purse strings. And so that's the overall sentiment that we're getting. And so it's been an okay Christmas, but probably not the best.
How's luxury doing?
I think luxury will be absolutely fine. We've just had another melt up in the stock market. Apart from that wobble sort of around November time, stock market asset prices are doing well. They're up against quite tough comparisons, because if we look back a year, we had the excitement over the election. There was a little mini luxury boom which lasted until we had Liberation Day in April. Up against tough comparisons. We've also got the new designers coming in. The products are only just hitting the shelves now, but consumers will have been coming in and say, is Jonathan Anderson's Dior here? Oh no, it's not here yet, but what about this? And there's bound to be a bit of incremental sales. So it's a crucial period. I think luxury will be fine.
Andrew, what are you most excited about? Because we have quite a lot of new designers. I mean, you were mentioning Anderson at Dior. It's a different feel.
Yeah, it is.
Cooler.
It is, and obviously the big one is Gucci. We've got to watch what happens with Gucci, with Demna. I think that's the one that's really the make or break one. And that, the first collections were pretty well received. The Crazy Tiger film, the different outfits, for the different types of customer. But the big, some of that will hit the stores soon. Plus, you'll have the show in February, March. That will be the real sort of litmus test as to whether Demna is going to work at Gucci.
Andrew, we also have this story, luxury watch prices hit a 2-year high in the secondary market. Are we going to see just a lot more resale and vintage in general, or is it specifically for the, high-ticket items in luxury?
Is this secondary market watches?
Yeah, so this is secondary.
They've benefited from tariffs because in the US, most of the watches have gone up. And so because of that, people are turning to the secondary market. Plus, we've had a good few years of declines now, and it got to the point where some of these things were really good value for money. So you had the collectors coming back, and also it will be correlated with stock markets. But I think the main drive of the secondary market has been tariffs.
I know a lot of the focus is actually on what the Chancellor Rachel Reeves has done and some of the higher taxes and how that's impacted spending. This is mainly higher taxes on wealthy families. But do you see that at the margin in any of the retail sales and revenue figures that we've had? Either of you?
I think targeting those sort of middle-class, affluent families is not good for retail. They are at their peak of their spending power. They should be driving the economy, everything from restaurants to cars to kitchens. And if you are targeting those people, I don't think that's great. Particularly, we've also had the VAT on private schools. I don't think it's going to crater spending, but I think it's going to be, we'll keep our main holiday. We won't go away at half-term, so it will be at the margins. Maybe we'll put that new kitchen off for a year. So I think this will have a ripple-down effect on spending.
So interesting. Thank you both for joining us. Jennifer Creary, Bloomberg's global business reporter, and Bloomberg opinion columnist Andrea Felstead for a nice look at some of the retail spending over the holiday period. Now, trading hours for European gas and power are being extended in a major overhaul. Intercontinental Exchange says UK and EU gas and electricity contracts will trade for 22 hours a day by February 23rd, bringing it in line with other global energy products. Now, the move cements Europe's position as a liquid hub after traders flocked to the market in the wake of Russia's invasion of Ukraine. Now, Bloomberg also understands that China plans to approve some imports of NVIDIA's H200 chips as soon as this quarter. Sources tell us that Chinese officials will allow the chip for select commercial use, but it will be barred from the military, sensitive government agencies, critical infrastructure, and state-owned enterprises due to security concerns. Now, Blue Owl shares closed lower after the company said it will allow withdrawals of as much as 17% from one of its private credit funds. The move follows a wave of redemption requests last month in one of the most extreme signs to date of growing angst around private credit. And sticking to private markets, some analysts are calling for vigilance and healthy paranoia going into 26 after the collapse of Tricolor and First Brands prompted warnings about cockroaches in the market. Now let's hear from business leaders on their outlook for private credit in the year ahead.
Valuations globally, especially in the US, are high. I would argue in Germany and UK as two examples that you put your finger on, they're relatively low still, given the potential the companies have.
You can be big believers in AI. You can also question what the investment returns that are going to be yielded through some of these infrastructure investments, because just the sheer amount of capital and, will the revenues produce the amount of capital?
Credit stats are actually improving rather than declining. That does not mean we will not have late cycle banking behavior, because there are good banks and bad banks, and good insurance companies and bad insurance companies, and good asset managers and bad asset managers. But there's nothing that I see that is systemic.
Lenders make mistakes. There is fraud in markets. And that's something that as lenders we all have to try to protect against. But we should not be fooled by the fact that this is a very robust credit environment. Credit spreads are tight. And when we do have a cycle, which probably will come when there's an economic slowdown, there will be losses, and we'll feel that across the economy.
With us now is Bloomberg's private equity specialist, Kat Hidalgo. Kat, thank you so much for joining us. So 2025 was really the cockroaches, and it was, at some point it felt like it could really turn sour. Are we leaving those worries behind us?
Oh, gosh, I certainly hope so. But I'm not sure we can be completely sure just yet. The scrutiny has definitely been dialed up. People are thinking a lot more about private credit. But something that we have to think about when it comes to Tricolor and First Brands is that actually wasn't that related to private credit. So hopefully we won't see any big blow-ups. Absent a huge economic collapse or a major specific cockroach in private credit, it should be more of the same.
So does private credit pose any systemic risk if something were to go wrong?
Well, regulators are currently looking into this, so we can't be sure right now. They still don't have a complete picture. Anyone in the industry will tell you that absolutely there's no systemic risk whatsoever. But I think they talk a lot about how it's the capital that they have is long hold, so they lock it in and then it doesn't go anywhere, so there's no risk of a run on the bank situation. But how retailization impacts private credit, we don't know yet. You know, we've seen this Blue Owl news. Could change the face of it.
So, Kat, what can you tell me about default rates? Are they currently high? Are there any threats out there for the industry's future?
Well, I wish I could give you a conclusive answer on this, but private credit is annoyingly private, and any of the indexes that we look at, any of the default rates that we see, only cover a small portion of the industry. So it's very hard to get a kind of full picture of how distress looks. I think we've got some indices that say that default rates are falling, and that's great to see, but that's kind of the floor of where default rates are. It really could only be higher than that.
So do you look at the same, I mean, I imagine it's the same sectors that we worry about also in the equity market, right? Is there a bubble in the AI private credit space?
Yeah, I mean, the amount of money going into this is huge in private credit. It's in the trillions. And you know, it makes sense to worry about a bubble because so much money is going there. And are you seeing credit discipline faltering because they're just looking to grab market share? But then on the other hand, you know, operating margins are massive on these businesses. You're seeing like 80%, I think I saw somewhere, and these counterparties are blue chip, Microsoft, Meta, Alphabet. So I guess time will tell. Not for me to say.
Yeah, well, you'll continue the great reporting that you've done so far, Kat. Thank you so much. Bloomberg's private equity specialist, Kat Hidalgo. Now, the conversations, the matter, of course, will continue with the Pulse shortly. We'll also talk to Adam de la Zerda, founder of Visby Medical, about the rise of at-home testing kits. That's next, and this is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Growth hasn't been that bad. What's been bad is the employment growth. Why is 26 going to be different?
The balance of power in the jobs market, I think, has shifted towards employers.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What really is going to matter is the inflation data and the jobs data we get in January. There's a lot of strength despite some of the weakness that we see in the unemployment rate.
The December jobs report, Friday on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, last year, President Trump rattled global drug makers with threats of tariffs unless they manufactured in the U.S. It led to them running to cut deals with the Trump administration. Now, this was just one of the roadblocks that the pharma industry faced. But what about 2026? Well, I'm joined by Adam de la Zerda, founder of Visby Medical, which is announcing diagnostics partnerships. But first, Sam Fazeli, our director of research for global industries and senior pharmaceuticals analyst at Bloomberg Intelligence. So thank you both. Adam, congratulations. We'll get to that in a second. 2026, we have a full 12 months ahead. It feels like we've already lived 6 months this year, but we haven't. What will be the main drivers for pharma companies in general, Sam?
Yeah, the drivers have kicked off, Francine. Only last night we had a rumor that AbbVie, which then pretty quickly got denied by AbbVie, so we're still trying to figure out what the reality is or isn't, is going to make a bid for a biotech company called Revolution Medicines. That rumor came from Wall Street Journal. Then Bloomberg talked to AbbVie, and AbbVie, this is a rare event where a company comments on a rumor. They said, no, we're not in discussions. So we're trying to figure out what that means. And that could be a $20-25 billion. I mean, it depends, obviously. Yeah. The market's thinking the stock was up 30%. So that's the big kicker this year. And I think that M&A is going to be a key factor. And IPOs. We're looking for biotech IPOs, which have been very rare in the past 2 or 3 years.
And Sam, we'll talk to Adam in a second about this new collaboration. But are we going to see, I guess some of the physicians change, or some of these testing change? Is that going to be a huge game changer for the whole industry?
Yeah, I mean, I'd love to hear what obviously Adam says, because he's at the coalface. But in reality, the revolutions tend to take time. Yep. In the world of diagnostics, and it's not like you launch a brand new medicine and everybody goes, wow, I need to have this. It takes time because the process is tougher. So I'm sure Adam will have some views on this. But certainly the administration is a very different attitude to health in general. And one of them is diagnostics. And I think this new way that you got approved is quite interesting. So I'm sure we hear about that.
Yes, Adam, first of all, congratulations. I mean, this is about a partnership. It's a new collaboration. Can you tell us a little bit more about how big a deal this is?
Right. So first of all, thanks so much for having me. So, if you walk into, let's say, a big hospital laboratory, you're going to find a bunch of big instruments. One of them will be a machine called PCR. And it is really the gold standard for diagnosing infections, whether we're talking about an eye infection, ear infection, respiratory, skin, even STDs. And really the main technological step that we've made here is to take that big instrument that's about the size of a sofa, costs close to $1 million, and we miniaturize to something that fits to the palm of your hand. So now we're empowering people to run those kinds of advanced diagnostic tests that you would otherwise have to go to the hospital for at the privacy and convenience of your own home. So if you take a step back, think about what it means for the system is totally bogged down today and clogged with tens of millions of patients walking in to doctors' offices today. And you have to wait a few days, maybe a week or so to get a result. So you go into the doctor thinking, I'm going to get a treatment, and that's not the case.
And is this basically, has everything changed since COVID? So is the technology used, different thanks to COVID?
That's exactly right, yes. So really the fundamental challenge here is how do we empower patient access in a home setting, right? And COVID basically made everyone feel like, why can't I run those kinds of tests at home? So this is really what we've been able to do is to convince the FDA for the first time really in the history of the agency, let's enable those kinds of advanced PCR diagnostic tests in the home. They're just as accurate as the big hospital laboratory tests, but they're giving you something that you wouldn't be able to get otherwise.
So I want to get Sam into the conversation in a second, but how much, this is also a big partnership with some pretty big companies. I mean, this is Quest Diagnostics, this is LabCorp. Right. So in terms of money, like how much are you expecting to either sell or partner or make?
Yes, so really what this test is enabling us to do now is to transition the testing from the laboratory to the home. And really those two major partnerships, Quest, LabCorp, the two largest laboratories in America, if you put that together with our partnerships with DoorDash for instant delivery, so these tests can be transmitted immediately to the patient home, we're starting to solve perhaps one of the most important challenges in healthcare, which is patient access. Right? And that's really the core of what this is. We started from a women's sexual health test for all the right reasons. In America, we have a real silent epidemic. 100,000 women every year in the United States lose their fertility entirely because of these completely treatable infections, mostly because of lack of access. So again, this is where the partnership with Quest, LabCorp, DoorDash, and so on really come together to solve that patient access problem that we have.
Sam?
But what's interesting here is, of course, STIs do make a lot of sense because you can't do what we call an antigen test. You remember all those little tests we had during COVID? Those are...
Oh, we remember them.
Yeah, those are 2 to a penny, right? and how many people had their brains drilled. But here, STI does have another angle in that there's this potential stigma associated with it, so maybe people are more reluctant to go to a clinic. Right. And I completely understand that. And what's your view of the market size there in terms of the addressable market size? Yeah. We won't get into forecasts. But then also, where can it go from here? I mean, cancer, I wonder whether you actually... It's not a bad thing to go and see a doctor while you're getting your test results, etc. How does that work?
So just in the world of sexually transmitted infections in the United States, there are about 40 to 50 million such tests being run every year in the big centralized laboratories. About half the time, the result never makes it back to the patient, and that's actually because of these stigma issues. The doctor finally calls you back, people don't pick up the phone, and so on. So we have a real patient access and patient follow-up challenges there. But if you take a broader step here, if you just think about infections for a moment, think respiratory infections, so everything that PCR can test for. Respiratory infections like sore throat conditions. This is the kid waking up at 3 o'clock in the morning. Mommy, daddy, my throat hurts. They're spiking up fever. What is it? Is it strep? Is it one of the viruses? If it's strep, you want to give them an antibiotic. If it's one of the viruses, we're talking about a whole different course of treatment. Wouldn't it be nice to be able to prevent you from needing to go to the emergency room in the middle of the night or the urgent care or something, have that test right there, and then through an ecosystem that we built that can take you really from test to treat in a matter of about 10 minutes or so. So once we give you the test result, and it's a small little disposable test, once we give you that test result, 10 minutes later on the app, we're connecting you to telemedicine as part of the partnership we've announced today. And what that gives you is immediate access to treatment. So,
but Adam, so this is important, right? Because if I do the tests, I mean, if I'm, me, I don't know what to do afterwards. Right? I still need to speak to a doctor, which is why you've partnered with United Health to allow access to care. So how does that work?
Yeah, so that's perhaps one of the most important things. You're right, because
Sam knows what to do, by the way, if the child is sick. I don't.
So let's say the average patient, right? They get one of our STD tests. If all we did is to give them the test result, and let's say they test positive for something, we just delivered them pretty bad news. But what do they do next, right? If they have to go to the doctor and schlep there and so on, that's not the point. What we did is we built a full end-to-end integration with the leading telemedicine platform in the world. And what that allows us to do now is to show you the test result, ask you a couple of questions. Are you allergic? Do you have any whatever, to anything? Do you pregnant and so on? And once you answer those questions, you press the button, and only 10 minutes later, you're getting that test result and prescription sent to your local pharmacy. So it's a test-to-treat ecosystem that we've enabled here, basically.
I mean, what are you most excited to? I mean, Sam's good point is, like, what other conditions can be tested?
So we start first from women's sexual health, but we're certainly expanding this to men. We men may not suffer the long-term consequences of these STDs, but we certainly need to test. It's the right thing to do. Beyond that, respiratory conditions, sore throat is another major one. Urinary tract infection is on our list as well. Not just telling you what is causing the UTI, which pathogen it is, but also what is the antibiotic resistance that you're seeing here, because so many of these bacteria are becoming resistant now. And continue going down the list: eye infections, ear infections, skin infections, and so on. There are quite a few of them.
Sam, I mean, does this change? How do you look at, I mean, it's not to talk about, like, Adam's business, but in general, it just change the social contract, right? The patient has in general with their medical doctor.
Especially in the U.S., there are changes happening. There are more and more specialist clinics opening, urgent care clinics opening that are not A&E exactly, but they're similar. And that, if you have a UTI, for example, you can go. But diagnostics moving closer to the patient, absolutely, is happening, and that's the way that you can solve. If you have a respiratory infection, it's better if you don't leave your home and not spread it, right? Remember, we've learned this, right? The question I have is, does the price point work for a influenza A, influenza B, whatever?
Yeah, and it's a great question. So I think the moment we think about it not just as a test, but as a full solution, end-to-end, I get this test, if I'm positive, there's a prescription waiting for me, you're saving the need to go to the doctor. That alone today to the healthcare insurance costs hundreds of dollars, right? Anywhere between $250 to $400 just for this one singular episode. If you can move all of that to the home, you're right. First of all, it's better for the patient. The privacy, convenience, you're meeting them where they want to be tested and treated, but also to the healthcare system. You're not bogging them down with unnecessary emergency room visits.
And you can get it to me quickly enough for me to know, I've got the sniffles, what have I got, or I don't feel very well this morning. Do I get it in, like, as you said, DoorDash? How quickly does that work?
So if you live in one of the areas that DoorDash is serving, and we have a strategic partnership with them, we can get it to you within 20, 30 minutes or so. So again, let's say it's middle of the night, the kid waking up, sniffles or something, you're not sure. Should I go to the emergency room? Can I take care of it at home? Well, you can get the test right there, right then.
Very quickly, how large is the associated market for at-home testing?
So,
I mean, are we talking billions?
Yeah, totally, yes. Just if you think about the total number of episodes that are taking place today, it's somewhere between 80 to 120 million visits today that people go to the doctor's office. Every single one of them can replace with an at-home test.
Okay, wonderful. Great to have you both in the studio. Adam de la Zerda, founder of Visby Medical, and Sam Fazeli from Bloomberg Opinion. Now, Fed Governor Stephen Barron is on surveillance at 1 p.m. London time, so you don't want to miss that interview, especially before, of course, all of that data coming from the U.S. tomorrow. Up next, Bloomberg Brief, and this is Bloomberg.